Yee. Good morning. Good morning. This is October 13th, 2020. Um, Two stocks I want to talk about today. ALT, market cap 445.79 million. Float 22.24 million. As you can see, it was a previous runner here from the nines, from the 10s to the 35s. Started having a little gear up today. Multiple things happened on here. I placed a trade on USEG and ALT. ALT was the first one I took today, and I took a minus 1.5% loss on it. Nothing really significant happened during pre-market. It did have some news come out. Where was it? Yeah, for some kind of biotech for coronavirus related. But coronavirus stocks ain't really hot right now. Originally, I had MDGS, as you see over here. This is what I originally had on my watch for a pre-market breakout. As you can see, I was watching it is gearing up, and just never got there in the morning time. And then it just faded. So I stopped watching it. But then it eventually geared up and broke pre-market, which would have been a nice 6% gain. But again, discipline, like we spoke about, like I spoke about in the last video. I'm now disciplining myself for only 2 trades a day, no more than 2 trades. And if I'm down more than 2% on my first trade, then I'm done for the day. But my first trade was ALT. I took a 1.5 percent loss on it. And I was trying to buy, like I said, either we're going to buy pre-market breakouts or high of day breakouts. And I bought it over this high right here. So if we look at it at 718, so let's go over here. Okay, ALT. All right. Okay, and so at 718, which was in this candle right here, again, broke, let it pull back a little bit. I wanted to buy at the break of this 1596, and it broke at 17 a.m. And then at 718 on a slight pullback, that's when I purchased it. Purchased 50 shares at 1594.5, which was a great execution. Got as high as 1622, which I believe so about 26 cents a share, I believe. So about 28 cents a share. So never got into that +3, +4 range. It did get to about 2% range, and then that was the high it ever made, and it just kept going. And then I noticed it in this turn here. So I was being patient with it. Like I said, -2, +4 at this point in my journey. So at 737, right here is when I sold it, because now you could see the momentum turning. So if you look right here, this is holding a trend, and then it just broke out of the trend from right here. Let me see. Where's my tools? Drawing tools. Dude, trend line. See, so this was the trend. For me, this was the trend. And then when it broke out of that trend, that's when I started, it broke out of that trend right here at 725. I let it play out a little bit longer, and then when it started dipping down here, it just went out of the trend now. It's no longer looking like it's in my favor. Because as you can see, it was just staying above this, and it could have potentially reached, I wanted to get out over here, which would have gave me a nice, that's a nice 8% profit, which I'm trying to capture about half of that move of 4%, but it broke the trend. So cut my loss. Very stuck to the plan. So that was beautiful trade. Stuck to the plan. ALT, like I said, 445 million market cap, which is a little bit higher than what I typically would trade. But like I said, the chart pattern alone, if you look right here, it has a potential to run. So as you can see, and then the float, 22.24 million, which is what I like to trade. So the float met my criteria as far as trade. But if we zoom out and go to the yearly, as you can see, it was consolidating right near its previous high. Let me go back. Oh, yeah, I gotta go back. Trademark tool again. All right. So this high right here, boom, boom, before it had its huge breakout, that's where it's consolidating. So this is a consolidation right here. So when it broke out of a multi-day high and broke out of the consolidation, that's what made it valid for me to trade, which made it interesting because it broke here. This is the multi-day line right here. Broke, pulled back, then re-broke it, pulled back, and then made a higher high when it re-broke it, made a higher intraday high. So when I seen it grinding back up, that was a good signal to purchase right here, which, like I said, it got me roughly to about 2.8% profit, but that wasn't the profit target. So I patiently waited and stuck to the plan. And the plan, it went out of the trend that I was seeing. I was expecting it to make a new high and break this high when it here. And then when it didn't and it pulled back and went out of trend, that's when I decided to cut my loss. And I'm glad I did, because there you go. As you can see, straight down after that. Beautiful. Stuck to the plan on ALT. Beautiful trade. Very happy with it. Again, I'm playing these higher market caps because that's what the market is giving me. I still like to maintain my float around 20 million or less, because that's what the type of volatility that I like. The float rotation wasn't necessarily speeding up like I would like as of right now. It's trading about 10.5 million shares, which is roughly about half the float. So not as much trading going on as I would like. But it was a beautiful trend, and then it just so happened to break out of the trend. And so you stick to your plan and you cut it there. So that was a nice trade. So after that, let's go here. USEG, which is more fits my criteria of patterns of what I like to trade. And as you can see, also a previous runner, has history of spiking. In this one day, it went from $4 all the way to $18. So that is a beautiful thing to see. And as you can see right here, it was just showing a gradual steady climb. But I chased it a little bit because I've noticed when some of these lower volumes, when they pop and then consolidate, then it popped, consolidated, then it popped again. And so I bought it at the breakout of 625. Yeah, 625. Yeah, I bought it at the break at 625. It executed me at 630, which was already not that great. Popped to 638, which put me up, on 100 shares. That wasn't even a 1%. And then when it tanked here, it was still showing strength in the level 2 and the time and sales. But then when this big candle came in, that's when I sold it and took my minus 2.4% loss. So overall, USEG was a little bit more of a chase because of how fast these things could pop, because I've seen them pop, especially on slower volume. So as you can see, it's only traded 1.4 million shares, but the float on this thing is less than a million. I believe when I got in, it was trading over a half a million. And as you can see, the float is 960,000. So more than half the float was being traded at the time I entered. Market cap at 9.74 million, which is what I like to see. And as you can see, it has history of spiking and having huge runs. But again, like I spoke on yesterday, with the profit from yesterday, is I can't allow yesterday to influence my decision when you see previous runners popping, and I did not allow me to have that psychological hurdle today. I stuck to the plan completely, and like I said, it could go either way. You never know. Yes, I collected a nice 4% profit yesterday, and then had a run where I could have collected an 18% profit, but that's not the profit target. That's not the plan. So I can't allow that to influence my decision making for the next time I'm trading, which I did not allow that to happen today. I stuck to the plan. Either I'm cutting it at -2 or I'm getting out at +4. And it just so happened in this candle I was down -1.7, and then it dropped really fast and I was instantly down -2.8. Sold it at the market, and it executed me at -2.4. So still within my range of, right in my range of where I like to get out. So this trade particularly met all my criteria. No real news on it, I don't believe. Nope. No news on it. Just the fact that it was having a nice squeeze right here. As you can see, the volume picked up right here. Once the volume started picking up and I noticed it pop here, I mean, it would have been realistic if I could have noticed it when it was breaking the high in the 590s. That would have executed me a great profit, but I didn't come into it until I noticed it in this candle. And so when it had this pullback and then shot up and broke again, it does have the potential to keep going, possibly to the 650s and possibly to the 7s. It has the potential because the history of this chart shows that it does have that potential. But again, you never know if they're going to work. So you have to make sure you maintain and stick to your stop loss, which is what I did here. Did get a little jumpy because it happened so fast. I noticed it so fast when it was already in this area that I kind of just reacted to it on instinct instead of really just take time to evaluate and be patient with it and wait. But again, it was an intraday breakout, which is what I like to play. And it was a breakout. It just was a failed breakout that didn't work in my favor. Again, you have to think about maintaining the plan of the -2 +4. And when you stick to that range, it's always worked for me. So after readjusting from the big mental disaster of PPSI, we've had a +5, a +4, and then now in today we had a -2.4 and a -1.5. So in hindsight, after the readjustment, it's still profitable, which like I said, when I go through the data and understand my mental process, my emotional process, and the numerical data behind it, where's my comfort zone in the market, we're starting to figure out exactly where my comfort zone is because, again, -2.4, -1.5 today is roughly exactly what I made in one trade yesterday. So it took 2 trades to -1 good trade of mine for this week. So for this week, I'm basically, today is Tuesday. So for this week, I'm so far basically back at 0, break even. Had the +4 yesterday and basically had a -3.9 today. So roughly right around the same. And that's the range I like to stick to. That is what I'm comfortable with. Emotionally, that's what I'm comfortable with mentally. And that's what the numerical data suggests through, 30 plus trades that I'm profitable at. So that's the range that I need to stick with and not allow these runners to influence my decision to try to be greedy and try to capture a bigger move. Because when it works and it works instantly. When it doesn't work, as you can see, it didn't work instantly. I was in here for 2 minutes. I was in this trade for 2 minutes and it failed instantly. So if it works instantly. If it doesn't work instantly. Okay, that's the type of stuff I like to play. That's the volatility I like to play because it's comfortable for me to get in and out within 5 or so minutes or less. Sometimes a little bit longer if it has gradual steady climbs. But when you're seeing volatility like this one candle went from 589 to 613. So, that's a 25-cent move in one candle. And then the very next candle goes from 601 to 625. So another 24 cents in one candle. That's the type of volatility that I like to look for because when they pop and you're right, you collect that quick 4 or 5% profit compared to if I'm wrong, I could just cut it at 2%. So that's still a 2-to-1 risk reward. And that's the plan. And that's the thing I have to stick to. Another thing that I told myself to discipline myself to is no more than 2 trades per day. I hit my 2 trades and I just shut my computer and, kept my mind off the market because that is also very important to stick to those type of rules. And that's one thing that now in this trading journey that I'm on now and executing this as a business, that those are the type of rules you have to stick to make sure that you're not over trading, because over trading could lead to disaster just like it did on PPSI. So PPSI was a great lesson for me psychologically when I go through my data and I rewatch these videos of what not to do because I'm still trading my setups, but if you're over trading your setup in a short period of time, it could lead to disaster. And obviously that was probably my biggest day of loss plus mental disaster of just not really sticking to the plan, chasing, and as we spoke on before with FOMO and revenge trading. So today, perfect, stuck to the plan. Again, always a great day, red, green, or in between if you stick to the plan. Maintain the mental discipline of no more than 2 trades. I accomplished that today. Maintain the mental discipline of keeping cutting my loss at -2 or exiting at +4. I did that today. So that is what I have to stick to for the long run in the process of trading, because trading is the long run game, man. It's not, what could I accomplish right now? And I just watched a great interview of Tim Grittani, who's one of the top traders in day trading and the type of things that we all, that's within my niche of trading as far as, low floats and small cap stocks and these runners. And he said it perfectly. It's not about whether you're red or green on the day. That's not how you evaluate if you had a good day. You evaluate how you have a good day by if you stuck to your plan and had the discipline to stick to your plan and make sure that you're following all your rules as a trader, because all traders are different and we all have to come up with rules that fit our personalities and that fit the way we like to do things. And for me, this is my comfort zone, -2 +4, buying an intraday break, which is what I did. I was buying the intraday high here. And again, same thing with ALT, bought the intraday high. And then just today, they just didn't happen to work out for me like they did on Monday and it did for me on Friday. So it's just the continuation of sticking to this discipline of this particular plan. And again, like I said, so after PPSI, I've had 5 trades after PPSI. 2 of them green, 3 of them red. Well, actually, one's pretty much a break even because it was like a third of 1%. So basically a break even and overall profitable. Plus 9% minus plus 9 minus 4. So, about 6% profit from the comeback of the mental disaster I had with PPSI, which was a great lesson, and I'm glad I got to record my thought process on it because it truly helped immensely rewatching that and understanding what really happened. And it was just a complete mental meltdown. And the discipline, the lesson is discipline, 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 and sticking to your rules, sticking to your plan. So obviously, through the numerical data, I know For the technical patterns I like to play, I have, you know, a 50-50 win rate when I stick to the discipline of the numerical data I have of the -2 +4 and the mental and emotional data I have of the comfortability I am within the market when I'm trading within that range. So when I'm in with that range, I'm very comfortable and it's very easy for me to execute when I maintain that range. So that is the goal, to maintain the discipline within that range and not allow one or two plays to influence me to want to get out of that range. And if it just so happens that, you know, hey, if I would have caught it right here, and bought this break of the 588 or 590 break, instantly shot up. Okay, you know, and I could have, you know, collected more than 4% because of the volatility within these certain candles. That could have collected me even when I hit, because I like hitting sell the market because it executes faster. So if I hit sell the market and I'm seeing I'm up +4%, and I hit sell the market, it can very well execute me at a +5 or +6% when I hit sell the market. So, you know, and I have to keep that in hindsight, because when they work fast. They work fast. That's what I'm looking for. I want to see them pop fast. This was a fast pop if I'd have been able to catch that break. Unfortunately, I was in ALT at the time. Didn't get to catch this specific break. Then I did chase it a little bit because it happened so fast. And my mind said buy the break of the intraday high, which is what I did, which is part of my plan and part of my strategy. But it was already, without realizing that this is already overextended for something that's not trading as high as volume that I would prefer. Now, if the volume was already rotating 2 or 3 times, that might have gave it the push I needed. But it was trading roughly about half the float at the time of this break, which means that there's not as much volatility involved. There's not as much buyers involved. There's not enough rotation within the float to cause a push that I was looking for, and therefore a -2.4%. So stuck to the plan today, walked away. Like I said, if I'm automatically down in my first trade over -2%, walk away for the day. But I wasn't. I was only down -1.5%, which is really nothing. No big deal there. And I was absolutely right, because when it broke the trend, you know, I could have had a potential disaster here if I wanted to play that mental game of, well, it can potentially keep going. Playing those type of games, that's allowing your emotions to take over your trades instead of just sticking to your plan. PPSI taught me that great lesson, to not let the emotions take over and just stick to the plan. And again, man, this is a constant game of collecting your own data on yourselves to understand what you're comfortable at in this market and what you're capable of accomplishing to be profitable. So the -6 plus 13 mentally and emotionally was not working for me, and now I found a comfort zone that is profitable in the long run, but only time will tell with the more data I collect on it. But as of right now, it seems to be working for me, so I need to stay within that zone. And as long as I maintain within that zone, everything so far is suggesting that I can continue to be profitable in that zone. So the mental discipline to stay in that zone, sticking to the plan of pre-market breakouts or intraday high breakouts. Did that both today beautifully. Cut my losses at my loss point beautifully. Stuck to the plan completely and walked away from the laptop. Even though I have another 4 trades, exactly like I said, it doesn't matter, because that could cause total disaster if I wanted to try to capture these moves. Even here in MDGS, MDGS was the original stock I was watching after pre-market when I came into the market this morning. And it was having a nice climb, and I was waiting for it to break the pre-market high of 366. I was watching it in here, but when it double topped the multi-day breakout level and didn't break it at 357, then it tanked down here. That's when I took my eyes off of it, because it was no longer in trend for what I was trying to capture, the move I was trying to capture, because I wanted to capture the 366 to the $4. And this, I had 240 shares ready to buy So 240 shares from 366 to 4. That would have been about a 7.2% gain. So I would have been able to capture my 4%. And it did wind up breaking here later, right here at 756 after I was already done with my 2 trades. So again, stick to the mental discipline of, hey, if I'm done with 2 trades, that's it for the day. And then watching this run, I could have easily bought it here, but it was a big squeeze. And yeah, I could have probably still captured 4% here. Yeah, I could have probably still caught that 4%. Well, actually, it would have probably been 200 shares. So 70 to 90, 20. Yeah, that would have been exactly a 4% gain. So that would have been tough to capture right there, because that would have been my max for that move. And then look, then it dropped, and I could have took that loss before it wound up and ripped again. So again, that could have very well been a loss if I seen that and try to capture it with a 3rd trade. And then that would have put me in the hole another -2, which would have put me, at a -6 for the day instead of a -3.9. So, overall, discipline, stick to the plan, trade like a robot. And I found my range of what I'm comfortable with exiting, whether it's a loss or a profit. And it's a 2-to-1 risk reward. So as long as I stay within the 50% range of win rate, which is where I've roughly been around, I probably dipped below it a little bit. Probably about like a 48 to 47% win rate. But again, at a 2-to-1 risk reward, that still ends up profitable at the end of all of it. So again, stick to the plan. That's the ultimate lesson for it all. Not only when it comes to the execution of your entry point and your exit points, but also the plan of only 2 day trades a day. If my first one is down -2 on the day, just walk away and just, hey, 1 trade that day, that's it. And same thing, if I'm up +4% on the day, just walk away, that's it. So those are my targets. If my first trade is a -2 or more, then I'm done for the day. If my first trade is a +4 or more, just walk away and take it. Because I've been there where I might have a +4 or 5% trade, and then I'm feeling good, on that high of, hey, I just had a win, and then try to play again, and now I'm taking a -2, and then I finish the day with a +2 when I could have just walked away with the +4. So, it's just those mental disciplines of your plan that you have to stick to. And now I'm implementing these different criterias of rules into my trading that will help me out significantly in the long run. So, yeah, man. So that's pretty much it for today. USEG -2.4, stuck to the plan. Great trade. And ALT -1.5, stuck to the plan. Great trade. And that's all we can do, man. Stick to the plan. No emotional attachment to it. Maintain the -2 +4, and we'll be good to go for the long run of the future. So USEG, ALT, stuck to the plan on both of them. So happy with both of those trades. All right. That's going to be it for today. Till next time.